Welcome back. I'm Pratap here. Let us evaluate performance of high liquidity zones generated on last Friday. Yesterday is a special trading day, and let us check the high liquidity zones performance during yesterday's trading. Even before that, a small announcement, please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training lessons are available in a playlist, Supply Demand Zone Price Action course at our YouTube channel. I'm also providing the link to that playlist in this YouTube video description. Click the link and you will get into this page. And then scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills. I have also provided the link to our Telegram channel in this YouTube video description. Please join in the Telegram channel. It will be useful to you. Each time when we release a new video, we will provide an update in the Telegram channel. Now let us get into high liquidity zones analysis. We have identified 4 high liquidity zones during our last report. Out of these 4, we got one trade, Lawrence Lab, and 2 zones are violated, and we know that they will be violated because they are already tested zones, especially at fine-tuned 5 minutes area. First, let us discuss Lawrence Lab. This is a 75 minutes high liquidity zone. So let me go to 75 minutes time frame. Here we have a drop-based drop. You are seeing the 75 minute zone. And inside this 75 minutes, we have fine-tuned to 15 minutes time frame. So here we have a 15 minute zone, rally-based drop. And inside this, the 5 minute zone is there. Let me show you. We have a rally, 1, 2, 3, 4, 5 base candles and a drop candle. Actually, these 2 are leg candles, medium size leg candles. As I told you earlier, if there are base candles, after that any medium size leg candles are there, you can also consider them as base candles for drawing the zone point of view. But where is the real order flow? Strictly speaking, even though these are 2 leg candles, medium size leg candles are part of the base, where is the real order flow? That you need to confirm. If you don't confirm, again the zone will be easily violated. Is there any real order flow? Is there or not? That is what we need to confirm, because there is a good move. Who is the reason behind creating this move? For that, go to the 1 minute time frame, because you should know when you have to really get into the 1 minute time frame. That clarity you should know. This is one such kind of scenario. So this is the 1 minute time frame. If you look into the 1 minute time frame, and you will find the real origin behind this entire order flow. You have a rally candle, you have a base candle, you have a drop candle, and then follow through candles, and thereafter see how the market is down. And here we have the real order flow in this area. And if prices get into this area, definitely we should not miss the trade. So let us verify when the prices get into that area. See the price action close just before entering into that order flow, how the rejections from here. That means this is an indication that there is a strong order flow in this area. And yesterday, that is on Saturday, the special trading day, the prices entered into that area. We got the trade. So when it happened, in 9 o'clock, 18 minutes candle, prices came, and once again it reached. In case if you miss this opportunity, once again it gave another entry at 11 o'clock 16, and thereafter there is a big push, and finally reached the target at 12 o'clock 27 minutes. This is our 15 minutes target. because always in high liquidity zones, we aim for 15 minutes. Yesterday is only a small trading session. Only few hours there was a trading yesterday. Even then, see here, you may take a trade, you doesn't take a trade. That is a different story. But however, high liquidity zones are working even in special trading days. That is what you have to understand. Because this session is about not only how our trades are executed, but also it tells about the power of high liquidity zone. That is the main goal of this session. To make you understand how much success they are giving. Because every day we are monitoring them. So this is the way Laris Lab has given a profit 35 rupees. 9,435 rupees as per one futures lot. And the ROA is 6.7%. Return on the investment based on one futures lot. That is 6.7%. Excellent trade during the special trading day. So this is about Laris. And there are other stocks, they have been violated. That is, one is WTAS. Let me show you from daily time frame point of view. Already WTAS, we have a daily high liquidity zone. Below that, a 75-minute zone is created. If you look into the 75 minutes, here you see you have a drop candle, 3 base candles, and a drop candle. But is this zone really tested? That you will understand once you get into lower time frames like 15 minutes and 5 minutes. See here. We have a 5-minute zone. Rally 1, 2, 3, 4, 5 base candles and a drop candle. And if you get into again 5 minutes within this 15 minutes area, we have identified, see, a rally candle, base candle, and 2 base candles and a drop candle. See here, prices entered and tested the zone, the 5-minute zone, and then it came down. Because we expect the 5-minute zone should be a fresh zone, the fine-tuned 5-minute zone. We should not forget it. There is a difference between pronouncing 5-minute zone and the fine-tuned 5-minute zone. Here we are not taking trades on the 5-minute zones. We are taking trades on the fine-tuned 5-minute zones. That means 5-minute zone should be inside the 15-minute zone. That 15-minute zone should be inside the 75-minute zone. Then we call this 5-minute zone as a fine-tuned 5-minute zone. The fine-tuned 5-minute zone should be a tested zone. Here. But if you want to take a trade, the fine-tuned 5-minute zone should be a fresh zone. Because it is a tested zone, we can't plan a trade. We know this zone will be easily violated. See what happened today? Today means on our yesterday's trading. Easily violated. So that is the reason why we didn't plan any trade in this stock. Now looked into, see, the 15 minutes can be tested, we can accept. The 75 minutes can be tested, we can accept. But the fine-tuned 5 minutes should be a fresh zone. Or the 5 minutes fine-tuned zone should be at least high liquidity zone if you want to go for multi-testing. Even after 2 tests or 3 tests, you can plan a trade if it is a high liquidity zone. But this is a normal zone tested. Sometimes normal zones also will be tested 2 times, even 3 times. Based on that, we cannot confirm it is a high liquidity zone. Generally, what you do when you are not having any awareness whether it is high liquidity or not, sometimes what you do, you will assume maybe that could be, because it is multi-testing, that could be high liquidity. But there is no guarantee. That is only maybe 70 to 80%. 30% there is no guarantee. Only our software has to confirm the 5-minute zone is a high liquidity zone. So that's why when you are planning a second trade, a third trade, make sure the zone is a high liquidity zone. Otherwise, don't plan the trades. Anyway, this is a tested zone. So that's why easily violated. Because it is tested, we don't plan the trades. That is how we build our strategy. And next one is Syngenta international, look into this is a 75-minute zone, but I'm looking from the daily time frame point of view. So this zone is violated yesterday. Why it is violated? Because earlier this zone is already tested. Let us look into that. First we will look into 75 minutes. This is a drop based drop. Already it is tested. See here. It is tested in this candle and today it is violated. On Friday this zone was tested. So if you look into 15 minutes point of view, here we have drawn the zone rally based drop, and then again we fine tune that. Again rally, 2 base candles and a drop candle. Here actually you can also draw drop, base, drop. This also you can draw 5 minutes. But even then this is also tested. We cannot plan the trade. And this is the actual one on last Friday. So we can't plan a trade in this area because it is already tested. And see what happened yesterday. It is easily violated. See the VIX, maybe I am thinking it could be maybe because of some false trades during yesterday's. Sometimes what happened when you place market orders, if anybody, system generally, it works in a proper way. Sometimes what happened, it picks up the orders who already placed far beyond that. Rarely it happens in the systems. At the time it looks like you get a long VIX. Or maybe price will be opened here. Maybe just one trade is executed. After that, the rest of the trades might have executed here. So all these are all false indications and which disturbs our analysis actually. But anyway, it is violated. So this is Sinjin. And the last one is AU Bank. AU Bank is a daily high liquidity supply zone, drop, base, drop. Look from the daily point of view. Here some interesting point, let me show you here. From daily point of view, prices haven't entered into this zone. Isn't it? We didn't get an entry. But if you look into intraday chart, see what happened? This entire zone is violated. While opening itself, it opened here. Maybe it could be, I don't know, maybe it could be a false data. But whatever it is, or maybe one trade might have been executed. Just because of that, maybe during the opening, generally, in 15 minutes candle, but yesterday, what happened? Twice this particular trade has been executed. One between 9 o'clock 15 minutes to around 45 minutes till 10 o'clock. After that, there is a break of about 1 or 1.5 hours. Again, after that, again it started, and another 1 hour or 1 hour 15 it is executed. I think by 12:30 it is closed. So every time when the exchange starts, there is a possibility that some false trade might execute. Just one trade that changes the statistics. Let us assume one false trade opened with a false trade. See how the candle looks like. But the real order flow is here. Compare this one and daily chart. You will get clarity. Here, see. This is the daily candle. And this is the intraday candle. Intraday candle shows this entire zone is violated. But the daily chart is not telling you this zone is violated. So this is a quite dangerous such kind of data. Is it really happened, or is something wrong with the trading view data? Sometimes, even data provider also sometimes some wrong processing might take place while presenting their data. Rarely it might happen. So, but whatever it is no more safe to plan any trades on this because it is an ambiguity situation. We never know. But according to the daily, prices didn't reach. But according to intraday data, prices opened and the top, above this zone and then came down. So which is right, which is wrong, we never know. Just ignore the stock YBank even in the coming days also. So this is about the high liquidity zones we generated yesterday, and we got a successful trade on Lawrence Labs. So this is about high liquidity zones. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.